or no?
Dude, what's
Nah.
going on, man? You listen, I don't want you making me pay more taxpayer dollars and you blowing out all the electric grid in Okinawa, right? And
No,
we
I'm
gotta
not.
call base property to fix your to fix what's going on, man.
I'm
What's
not
going
being the
on over
biggest
there?
one. There's somebody that's pulling way more than me, like maybe 4 times as much as me.
You know what you should watch? You should watch Startup
Oh, I
on
watched
that.
Startup. Yeah,
Yeah?
yeah,
Okay. All right.
yeah,
All
yeah.
right.
Freaking Lieutenant Pavi got me onto that.
Okay. Yo, let me see. Yo, yeah, your headphones is tight.
This one,
Oh
it's
yeah.
the HyperX. I bought it on sale on Amazon for like 85 or 90.
Okay. Dude, so my headphones, they're gaming headphones. I got it from the PX. They 200, but they already breaking and stuff on sat.
I never. I always price match at PX. I never buy stuff at PX.
Copy.
Yeah,
Copy.
it's be weird because
What's up? James Harden still hurt?
Are y'all ready?
yeah,
Yeah, let's do it. So let me focus, boy. Game time.
Yeah. All right. So the first thing I wanted to talk to you about is on the everything's been kind of getting hurt lately. I'm sure you guys seen it. One of the things Matt wanted to address to begin with was like the whole cryptocurrency thing, and I know a lot of people are really new to it and they don't understand that there is volatility that's sometimes more than expected. They see the 30, 40, 50% down and they get kind of in shock, but there's no reason to be in shock over it. There's no reason to be in shock over it being down that much, because that's what that's what this cryptocurrency thing is about. You know what I mean? If you really are investing in things that you really believe in, no matter the asset class, you have to be with it when it goes down and look at those as buying opportunities. That's when looking at the charts. That's when looking at the charts really helps you out, because it's hard. It's easier to identify bottoms. Always remember how far it's gone up. Don't just look at how far it's gone down, because yes, some things are down from 2.45 to $1.15. But if it was just 9 cents less than a year ago, it's still up in the long term. You know what I mean? It's still up over 100%. It's still some of these are still up over 90%. So you need to be able to identify that just because it's down a little bit, it's still in the last year over year. Just think about Bitcoin, for example. Bitcoin is down half, right? It was at 60,000. Now it's gone down all the way to 30,000. It's bounced off of that just a little bit. But after the pandemic, it was all the way down at like $3,000. So even from there, it's multiplied 10 times. So you got to look at it like that. And that's why it's not good to get in the FOMO trades and jump in there after a lot of people have already been in there. Another thing to look at is that whales, for those who don't know what whales are, these are people that have a lot of money invested in these things. Whatever asset class it is, there's always going to be some sort of whale in there. And the whales sold at 58,000 for Bitcoin. Um, the same addresses that sold around the 58,000 mark, when it got down under 35,000, those same wallet addresses were purchasing again. And one of the addresses sold a lot at 58,000, and then they bought right back in. They bought 315 full Bitcoins at that price. So that's one thing you guys got to pay attention to, because while everybody's afraid, no matter what asset class, is this for the stock market as well, when everybody's afraid, that's when you got to get in there. Warren Buffett said it, when everybody's being greedy, you got to be scared, and when everybody's being scared, that's when you got to be greedy. So that's what did you take on that, Matt?
I think you're spot on, man. And you see, I pay attention. I'm looking at the social cues, especially in your group chat. And when prices are going up, you know, you can feel the aura of the chat, and everybody's excited. They're showing their gains and stuff. It's almost like we're in the gym. They're showing their gains off, right? And then when it goes down, you don't see any gains. People not even talking about crypto as much. But my thing is, that's when you need to be excited. That's when you got to enter. Um, I think there's trillions of dollars of debt. I of course I personally think it's gonna go to certain places, but crypto is gonna be one of them this debt bubble is gonna explode into. So I'm not sure about the complete long-term picture, but I think there's a lot of money to be made, and now is not the time to be scary.
Steven, what are your thoughts, man? Being a
Uh,
miner and all that. I know you said that as a miner has been benefiting you, all this volatility.
yeah, the volatility's been benefiting me. The biggest thing is like for the crypto, there's been a lot of factors in play. Like you got Elon, and then you got the China factories and everything, and then the big whales. There's been a lot of speculation, and then some of the stuff I put is that where the big whales they were trying to just pretty much bankrupt one of the big whales because they weren't in favor with them. So they literally orchestrated this dip or something like that just to get there. But that just could be one of the factors. And then you got the FOMO, the fear, and everything. So people's gonna sell out. So that made the dip even worse. That's why we can't see 20K, but we see 20K as I see. Just it's just like a rubber band. The farther it stretches, the more it can bounce back. Um, so I'm excited for it, especially even though I'm not getting big returns, I'm getting a lot of returns for the mining transactions. So
Yeah.
each transaction that happens gets the miners a bonus. So even though we're not getting a lot of returns from the price of Ethereum, the the rewards and block rewards from mining is going to be even higher just because of transactions. Uh, but that's pretty much all I can say. For crypto wise, it's just I'm excited to see what's happening. We reached out the potential for Ethereum. It hit 4.5. So I think on next bull run, we could probably see 5 or 6 next. Could be a little while, who knows? Just like some people in your chat said that November could be the next bull run.
Um, so from the miner's perspective, man, you as a miner, how, let us know how much because I know there's a lot of people out there that are curious about it and they want to get into it. How much did your entire setup cost? How long did it take you to build it? And what is your returns on it now?
So the entire setup, I put an Excel sheet. I think it cost me about 5,200. But I'm saying 5,200, including the prices of inflated graphics card right now, because right now a 3070 series, NVIDIA 3070 costs about 1,100 at a local Goodwill in Japan. In Alaska, one of our mining friends is doing an op in Alaska. They just took a picture of a 3080. That thing costs 2,700. And MSRP, that card is I think it was like just $800. It's 2,700 now.
That's insane, man. Supply and demand.
Yeah. So inflated prices and everything. My rig costs 5,200. So that's about I'm counting right now 1, 2, 3, 4, 5. That's about uh 9 cards. I have 2 inactive right now because I got to find room to plug it in. But that's about 9 cards. For numbers wise, I'm at 440 mega hashes for my hash rate. And returns wise at this time, I calculated last night with the current price of Ethereum floating around 2,300, 2,400. I'm making about 1,200 a month on returns. And then we'll say for California electricity, at 20 cents per kilowatt, I'd probably be losing about $200 of that for electricity. So $1,000 profit a month. So in 2 more months, I'll get all my money back. If we had the bull run for Ethereum where it was at 4,000, I'd be making about 2,200 a month. And yeah, that's for my mining.
Yeah. So how far, like, do you want to increase your rig size, or you're gonna leave it like that for a while?
I do, but since I'm moving soon, I just want to keep it to a minimum for movement costs and chances of it breaking. Which a lot of us have changed locations, and a lot of them made it safely. We came up with methods of sending it out. A lot of us is pretty much packing in our own durable, heavy duty plastic containers, shipping it out, paying insurance on it and everything, and paying for expedited shipment. Because literally, what we say is hash, meaning even though you pay to ship it fast, those 2 weeks that you wait forever for it is money as well.
Yeah, that is that's the compounding interest that you're
Yeah,
waiting on it. But
yeah. Because
um,
right now, 2 weeks for me is $500. So if it's less than $500 to ship it, I'm just gonna ship it.
but what about you know how they're so low in demand, right? Um, what if you were buying them here? Like, what would be your profit? You think if you bought it for 1,100 at the Goodwill and then you sold it to somebody in the States or something? How do you think that
So
would be worth it or no?
there is ways to flip it as well. It was actually funny. There's a army kid on the community that he bought a car that was $1,000 at Goodwill, and it was not the popular one. It was a Radeon 6700 XT. It's good, but it's not as popular as Nvidia. He bought it in hopes of selling for 2,000. So he tried to double the thing, and everybody just dragged him on that post, talked to him about it, and then we're like, hey, like you need to buy a card that everybody wants, which is the 30 series card.
Yeah.
So a lot of people bid to buy it. Some of them, there's a new mining called Chia Farming, which uses a hard drive proof of capacity. So a lot of them are shifting to that, and they're selling their miners right now, their graphics cards. One person posted he wanted to sell his card to us first, but he's only going to offer 1,200 minimum because right now people on eBay are buying a 3070 for $1,600.
What do you think about? I heard you mention the Radeon, so because I've been thinking about putting more money into AMD. I'm really bullish on AMD, but you're saying that their Radeon, which is like one of their upper end products, you're saying that one is not really well renowned in the industry.
For the graphics cards for their current generation, yes, but overall, AMD like their central processing units, CPUs, and everything, they're solid. Like I would choose Radeon. I choose Radeon myself, AMD for my CPUs instead of Intel. But it's just his graphic cards that came out. It's not as it didn't came up to par, but they can change it with software updates. Because they have when it came out, it wasn't really great. Now it's getting up there, so I say it's about in comparison to the price, it's it's um neutral to where the price is because it's $800 for a 3080, whereas a 67 XT is about 750. So it's $50 less, but you get almost the same performance. But AMD, what I've heard is they're trying to make their graphics cards more. They're looking for different types of semiconductors, so they're trying to beat the game in production
Mhm.
compared to Nvidia.
Yeah.
So that is where AMD is getting liked more because they're like, okay, they're more um, anti miners because their cards already have low hash rate, so miners don't really go for it anyways. So popular by retail and gamers is the AMD.
Yeah, so yeah, AMD. I'm not sure if you're tracking Matt, but AMD, their chips, man, are in both the PlayStation and they're also inside of the Xbox. The brand new
Yep.
PlayStation and Xbox,
Yep.
their chips are in both of them, bro. So they're hitting both of those sectors. Um, and I'm still, they have another company called Xilinx, and that's the company that they're supposed to end their merger by the end of this year. I'm very excited about that merger as well. A lot of people don't really talk about it. Um, if you haven't watched the video I made on AMD, go ahead and watch the video like once this is done. But that's a good video where I talk about like the products that they're launching. That's why I remember the Radeon when you mentioned it. I know that's one of their top notch products. But what do you think about them being in both of them? Like both of the greatest things that are being bought, AMD's chips are in both of them.
I think I used to study AMD. Another embarrassing story. Not really embarrassing, but when I first looked at AMD, I remember it like it was yesterday. Around 2013, 2014, it was $2 and change.
Yep.
But you got to remember, the landscape was different. They were getting their butt kicked by Intel. right? So I think what makes AMD unique, and Fong, stop me if I'm wrong. Um, they make graphic cards and CPUs. They make GPUs and CPUs, and they were. I'm just gonna be honest. At that time, they were kind of sucky at both, right? Because Nvidia dominated the GPU market, Intel dominated the CPU market,
So
and then now
thirty
what I've
minutes.
seen over the last year and a half, two, man, they married the two together. Oh, they seem like an unstoppable force.
So you know what that change was? That change was when they're on Reddit. They're calling her Queen Lisa Su, their new CEO. When she came into the picture, man, she brought everybody in, and she was already well respected because she was with IBM for 7 years, and she's got a lot of awards. She's got a lot of people that follow her. Now the Reddit crowd's getting behind her and all that. So I think that's another catalyst that can push the stock price up. But when Lisa Su came to them, they said, "We're doing this. We're trying to be the jack of all trades. Let's stop doing some of this other stuff that we're not as good at, and let's focus on what we want to be good at." And they did something that is smart, that is called find your customer first. Don't make a product and then try to find a customer for that product. There's something called find your customer first, where you find what people need and then you create a product to fit that need. So Lisa Su got all these gaming companies. She got all these people that needed semiconductors, and she just basically asked them, "How can we help you? What can we do to help you guys out?" And that was the best thing she could have done because she was giving the customers exactly what they wanted. So obviously they were going to buy it because she was making it with them. So she worked with those people to bring a product that they needed. So that's why I'm bullish on AMD. The entire semiconductor space has been getting hit, and I think this is a good time to buy. They're using Taiwan Semiconductor as the manufacturer to put their chips together, but I think that overall AMD, like, just, sometimes when you invest, is you don't invest in the company or the product. Sometimes you just want to invest in the person, like whoever's running it. That was one of the big things that got me in Cardano. Like, I wasn't investing in just the cryptocurrency. I was investing in Charles Hoskinson. That was the mind behind this cryptocurrency. And the same thing with Lisa Su. Like, I admire her. I respect her hustle, and I think she has a vision of where she wants to go, and she knows how to get people to make that vision happen. So as I invest more into AMD, I'm not doing it because of the chips and all that. I'm doing it because of the confidence that I have in her as the CEO. Um, but I want to apologize because I made a like 2 weeks ago, I made a video on AT&T and saying, how bullish it was, and right, it was a good time to get into it. Literally, like 48 hours later, they announced that they were getting rid of all of their Time Warner. They were gonna push 30% of that to Discovery. If you don't know who Discovery is, they're a broadcaster as well. So just wanted to apologize for that. And I wanted to give you an alternative. I'll be making a video on this one as well. It's another dividend player that pays about 7%. The name of this company used to be CenturyLink, but it's called Lumen Technologies. So I'll be making a video on that one, as a sorry and apology for the last for AT&T. Go ahead, Matt.
And so I want to ask you, why are you apologizing? Does AT&T not pay a dividend?
They pay a 7% dividend, but the wording after the announcement of this new deal, they worded it where the math, when you finally did the math and you went through and did all the math to what they were changing, they were slashing their dividend in half. But the way that they worded it in their press release, it was just math where somebody would have to go and do math, be like, we're doing it from $2.38 per share to one something, and it sounded good, but when you actually did the math behind it, they were slashing their dividend from 7% to under 4%.
So, and guess what? That's still a major dividend. You know what I'm saying? All right, let's slash it. Let's slash it all the way to 3.5%. Like, that's still, I personally think that's a good pick. If you could withstand the debt, AT&T has a lot of debt, but if you could withstand that and 5G rolling around, that's still a great pick. And what I'm really targeting here is, you know, we we also have to look at the long term investments. You know what I mean? I think AT&T, Dividend King, or Dividend Aristocrat. I'm sorry. Um, that's where you want to be, man. Like I think nowadays we're always chasing the fast money. You got to have some slow and steady horses as well. I see no apologies. I think that's a great pick.
You think that even with their them giving a majority of their percentage that they're going to get from all these movies from Time Warner, from HBO, a lot of that's going to go towards the Discovery now. Um, so that was one of the reasons I was really bullish, because they're working this model where we're releasing it in the movie theater, and then we're also going to release it in the um, on HBO at the same time. So people that want to see it in the movie theater have that option, and people that want to see it inside of the freaking their house, they have the same exact option. So I thought that working both of those angles was great, but now they're passing that on. Um, it kind of shows that they made a big mistake previously, but they're trying to fix it now. Um,
Mhm.
so, but I mean, I don't think it's a bad company whatsoever. My goal was just for those that were looking for that 7%. There's another company that I think is also bullish, and they're paying a 7% dividend as well, and that's Lumen Technologies, which just I'll be making a video on that one. So look forward to that one. Um, Next topic of conversation. Uh, I know you're gonna like this one. Tax hikes, proposed tax hikes. What do you guys think? What do you think, um, Matt?
You would give me the hard question.
Yep.
You got to be very sensitive. You got to be very sensitive towards this type of thing. Where I don't care what anybody says. I think we're in a fragile state of the economy, and you tax too much, it can have the opposite effect. To I don't want to go off on a tangent. I'm of the mindset of, and I'm not a conservative. I just want to throw that out there. But I'm of the mindset of all the companies abroad. We got to pull them back, and the companies that are currently in the U.S. I want to say drop taxes, cut the rates in half to 50%. Work out some type of deal. Um, and maybe if you have no, I was gonna say if you have 10 years, within the 10 years of a solid recovery, maybe we could continue to slowly hike them, because we have to pay down deficits, right? It's not like we can't have any taxes. We have to pay military members. We have to pay uh public school teachers. We have systems to pay for, but we also have to be sensitive, and we see a lot of major cities, right? The New Yorks of the world, the San Franciscos of the world, they're losing a lot of ground in places like Florida, Texas. So I think a lot of major cities have to reinvent themselves. And right now, I'm a proponent for dropping taxes. I'm not a fan of saying that per se, because elitism behind it, and you see the people who really prosper, but I think we have to do that to bring businesses back home.
I totally agree, man. The government's going to invest heavily because they did a study, and it turns out that for every $1 that they invest in finding people who are doing tax evasion, they found that it brings them back at least $4. So for every $1 they spend, they get $4 back. They found that they for those who don't know what a pass-through entity is, it's basically an LLC or a C corp or an S corp, and these are corporations that they let money funnel through them in order to make tax easier on the person that's a small business owner. There was 4 million created in 2018 alone, and out of those 4 million, only 100 were audited. 140 were audited by the IRS out of those 4 million pass-through entities. So the government is going to go deeper into these entities to find people, because they found that there was over $10 billion in unreported taxes in just the ones that they, the ones that they audited after they found out that they only audited 140. So things are going to get tougher. They were in a big deficit because of all this stimulus that has come in the past year. That money has to come be paid back, and the way that they're looking to pay that back is through taxes. One of the things that I would ask you to look at is look at how much you're spending and try to do math, whether it's an Excel spreadsheet or something like that for those who are doing cryptocurrency. That way you can report it. There's actually companies that are like the cryptocurrency version of H&R Block. I'm not going to say their names on here because I'm not sponsored or getting paid by anybody, but there's companies out there that are, they'll go through, you'll give them your wallet addresses if you trust them doing that, and they'll audit everything that you did and they'll file it for you, all the taxes you did. Because whether you have Trust Wallet, whether you're on Binance, eToro, Coinbase, some of these companies that are not based in the US, they're not going to give you a 1099 Bravo that shows all your transactions, buys and sells that you did throughout the year. So it's really on you to report those. I presume that next year they're going to start making you actually put all the buys and sells. This year, the only thing I saw was they asked you if you bought or sold cryptocurrency. Now the latest was that anything over $10,000, which most of us fall under that, but anything under $10,000 needs to be reported to the IRS whenever you're dealing in cryptocurrency over $10,000, whether you're buying, selling, being gifted, or anything like that. But there is something called chain analysis, blockchain analysis, where the government is they're putting out grants and things like that for people who study this in college or have degrees in this type of sector, where they're giving these people grants to try to come up with some sort of technology that'll help the government analyze the blockchain and get people and see what, the transactions that you're making. Right now, it's hard to see it, especially on things like Pancake Swap and Uniswap. It's hard for them to see all these transactions. With that, just know that a lot of these small coins that you're putting a lot of money into, if you are, just because they're really high, those same ones, for example, Shiba. Have you guys heard of Shiba? So Shiba was like the next meme coin, the next Doge coin. And last week, it had the highest volume and it had the highest gain percentage. This week, it has the highest volume still, but it has the lowest gain, like has the biggest loss percentage. So Shiba was the big winner last week and it got destroyed this week. And what sucks about that is that you have to buy and sell right away, which in reality, it's going to cause a taxable event, short-term capital gain event. And what are you going to do? Are you going to hold that money on the side and pay your taxes next year? That $4,000 you made in gain, put that into the savings account. A lot of people don't do that. They pull it out and they put all that money into the next coin. What happened a lot this year in the stock market and also in the cryptocurrency world was that people were buying and selling, buying and selling. They made huge gains. Some made huge gains on Bitcoin, Ether, Cardano, but they took those gains when they sold and they put it into other coins or other kind of asset classes. And then all those asset classes dropped and they didn't make it to, they might have been at the bottom of Bitcoin, but then they end up at the top of Cardano, or they end up at the top of Shiba, the top of SafeMoon. And now that big gain they had is all lost. They may still be in the positive, but now their gain is gone. And then when tax comes around, they don't have that money to pay the tax, because some of these people made like $50,000. I've seen $20,000, $30,000 off of one coin. And, the IRS wants their cut. No matter what, the IRS is always going to want their cut. So you got to plan for that. Plan for those short-term and long-term capital gains. One of the reasons I like eToro is that you can split it up and you can see each transaction you made. If on May 2nd, you bought 100 coins from Cardano, and then on June, you bought another 100 coins from Cardano, when the year passes, you can see, I want to sell the ones that I've had for a year. So the ones I bought in May last year, I'm going to sell those. And I don't want to sell the ones that I sold in June. The problem is that, especially in the stock world, when you have uh, like M1 Finance, TD Ameritrade, um, Robinhood, Webull, when you sell, it comes out of like your whole allotment. It doesn't just come out of that one specific one. Big hedge funds and pension funds, when they sell it in blocks for because they have to be very savvy when it comes to capital gains, and you should treat your investments like that as well. You should try to plan like, yes, I bought 100 shares on June of last year, and June next year I'll sell those 100 shares because I've made a big gain. Those short-term capital gains are going to eat at your overall long-term gains that you make later on down the road. And a lot of you have only seen the stock market go up, but even Matt here, he's been doing this since like when Tesla was less than $100 before pre-split, and he's seen huge up and downs. The last thing I'm gonna leave you with to pay attention to, especially coming into the summer, is that this month the Federal Reserve Chair, Jerome Powell, he stated that now they are thinking about tapering down and easing the monetary policy. So in 2018, when they raised the tax rate, just what was it, Matt? 0.25 or was it 0.50 in 2018 when the Fed announced they were raising the tax rate? Point two, was it? Which one was it? You remember?
I want to say point five oh. I want to say higher though. I feel like it was higher. I feel like it was higher than point five oh. I could be wrong, but you know what it was? If I remember correctly, I want to say they were approaching. They were trying to approach 1%. I want to say we were approaching 1%. But not to cut you off, that's cap. That's cap. I was actually looking for my baseball cap because
Go
that
ahead.
that's
Go ahead.
that
Tell us.
they want to raise rates. Technically speaking, looking at the past, the right thing to do is to raise rates. That is the right answer. But we have so much debt. We're saddled in so much debt on so many different levels, right? Personal, um, on a national level, on a municipal level, on a state level. Um, there's so much debt on a corporate level. Forgot that one. There's so much debt out there that the slightest move up will implode the market. The slightest move up. And this is not like during the Paul Volcker days, because Paul Volcker, he raised the interest rates all the way up. There's derivatives, right? There's like major derivative markets. So any move like that and a sudden drop or a swing in the market, you can implode it. Um, and that's something that I don't think Paul Volcker had to contend with, right? Dealing with such a large derivatives market, like, mm-mm, I I don't see it happening. I don't. I don't.
You don't see them raising it? Is that what you're saying? You don't see them raising the
I
rate?
don't see them raising it. I think they're trying to scare away the inflation story that's gonna happen regardless. But I don't think they could raise it. You see how the
Um,
market acts every time they do raise it. They're not gonna raise it. They
yeah,
can't.
so
They can't raise it. Like your loans will go up. New housing loans. You know that you do you know what that'll do to the new housing market or the current housing market? They're not
yeah,
raising rates. They can't.
so it's it's gonna be rough. The first thing they're not gonna do first is not gonna be saying we're gonna raise it 0.25. The first thing they'll do is they'll start tapering back things that they're already doing. For example, buying things like corporate credit or mortgage uh, securities, mortgage-backed securities. That's the kind of things they're doing now. They're doing, I think, 8 billion a month in buying back these things. But I think that's going to be the first thing to go. If you really don't know what we're talking about, I would look into monetary and fiscal policy because right now we're at like one of the easiest levels for both sides. So eventually they're going to have to stop tapering down because what happens is we get ourselves too overinflated, and there's things that could happen called hyperinflation, which is horrible. There's inflation, which is normal, but if it gets too hot, and I'm talking about between 7 and 10%, which has happened before, this is when you see mortgage rates of like 12% mortgage, and that's like a good one, you know. If you do some research, back in the day, like that was normal. Nowadays, when like really the older folks, they see these rates of like 3%, 2.275, like they're like, what? Like a lot of these people paid over 10% for their
Mm-hmm.
mortgage. A lot of
Mm-hmm.
these people paid over
Mm-hmm.
20%, 30%, 40% for a car loan. A lot of people were paying over 50% for just getting a personal loan to, you know, pay something that they have to pay. And uh, inflation is going to hurt a lot of these people. Another one is those people that don't have fixed mortgages. Their rates are going to change. Some people have the balloon, the 2-5 arm, things that sound attractive in the beginning, but when the inflation goes up, they may have had the lowest rates in the beginning, but those rates are going to zoom up. Add to that that right now the supply of housing is really low, which means that the price of housing is really high. For example, my house went from being valued at like $240,000 to $417,000
Wow.
in the span of less than a year. Like that's
Wow.
insane. I want to buy more houses right now. Not right now. Like right now, I do. Like I really want to, but at these prices, I just can't. I can't. I'm right now. I'm even debating selling the house that I paid off that's in Virginia
Mm-hmm.
because, like, I feel like I'd be a fool not to sell it for, you know, doubling where people are gonna overpay for my. I feel like if I listed it at 450, people would still buy it at 450 because that's how bad they want it. There's like a FOMO in the market, and it's taken a long time for the home builders to build these houses. But what's going to happen is that the home builders, it's the way the cycles work. So the home builders are going to build way too many houses, and it's going to time exactly when people are defaulting on their these loans that have been so easy to get. The rates have been so low, but a lot of people aren't working because all they're doing is collecting unemployment. And unemployment is so high right now that it's like attractive. Like some people make more from unemployment than actually going to work their 9 to 5 in McDonald's or some of these other places. So it's easier to stay home and not do anything and just collect that check. But when that check stops and you still have to pay these loans that you took out, it's going to hurt. And there's going to be an oversupply of housing with not a lot of people that want to buy it, which is going to make all these stocks, bonds, everything resort back to the mean, which means like their average price or their fair market value. So my house will end up going back to 200,000 something. So if I did sell now, I wouldn't sell and buy. I would sell and hold that money on the side until, you know, the housing market went back to the mean or crashed, whichever one. And that's where the main opportunities are at. Sometimes like that money gets itchy in your pocket, like, or you'll see that money sitting in your brokerage account, and it's like you get that itch, like I want to buy something. I feel like I'm not making anything on this money that's just sitting there. But it just takes discipline and it takes patience to stay on the sideline, keep the money on the sideline, just keep it there, because as good as some things in the cryptocurrency market seem now, like it's harder for me because even though Cardano just fell from 245 to 130, and I love Cardano, like I bought Cardano at 9 cents. So when I see it at $1.30, I'm like, that's still pretty high. That's still expensive. You know what I mean? So just because you see a big drop, it doesn't mean get in there. Just be patient. Everybody thinks, you know, they this whole buy the dip craze, people take it out of context. A dip in the stock market, yes, a dip in the stock market is like 10%. A dip in cryptocurrency is not 10%. A dip in cryptocurrency is like 30, 45%, because a crash in the stock market is about 50%, but a crash in the cryptocurrency market could be like 90%. And you got to be prepared for that. A
Um,
strategy I would advise is just sell little by little as it goes up. Just take profit as it goes up. Um, People ask me, you know, do you sell Cardano? Yeah, I sell it all the time because I don't think that anything, no matter what the asset class, how great it is, can go up forever. Look at Tesla. Tesla's went to 2,500 pre-split, and I think now they're down to like 1,000 something pre-split. Go ahead, Matt. You were gonna say
now,
something?
No, I agree with you 100%, but I just want to go back to the rates. Um, it's pretty dire, and I'm not coming here with the doomsday, um, doom and gloom, and be the bearer of bad news. I know I get that title, the grumpy old man title, but it's a reason why crypto's taking off. All right, it's the reason why, to some, not to all, some monetary metals are getting more attention. It's a reason for that. I don't know if you heard about Michael Berry's tweet. Did you hear about his tweet?
Yes, about Tesla.
Not about Tesla, about so he predicted, so he had a whole he put out a whole soliloquy on Twitter, and he said people were saying I didn't warn them the last bubble, so let me take this time to warn you about this bubble. Nobody Everybody said that I never told them what was going to happen. So I'm going to tell you what's going to happen now. Hyperinflation. And the SEC came and just he gave a lot of examples. He compared us to Weimar Germany. When you compare the money supply and things of that nature. Um, and the SEC came and told him to take down his tweet. The SEC came and told him, he doesn't have freedom of speech. Take that tweet down. And to me, he's one of the greatest investors of our generation, hands down. Um, I know you like the gentleman from Facebook. I can't say his name. Um,
Zuckerberg.
no, 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 no.
Oh, yeah,
Yeah,
Kamat
and,
Palapati.
and he's good. He's good. I think he's in the right places at the right time. But Dr. Berry or Burry, he really like studies the financial markets like thoroughly.
Yeah,
Um, I don't think people really understand you, and you kind of you talked about it, but I just want to emphasize where I just don't see them raising rates, man. I think they're gonna attempt, and you talk about not buying corporate bonds. I just don't see that happening. I don't see it happening because every time they do that, the repo rates, you see what happened with the repo rates, right?
yeah.
It's just the problem with printing money. Once you start, you can't stop. It's really like a drug addiction. Once the bill gets bigger, so what you do, you print more, and then that bill gets bigger, and then what do? You print more, and then now you want to pay this back without printing, but we can't raise taxes that high. We can't raise interest rates that high. They're gonna print more. The money supply is only going up from here. That I can guarantee you. This tapering off, it's nonsense. I promise you. I think they're gonna attempt, but just like they did in 2018, I think it's gonna be to no avail.
Great points, man. We're almost at the end of this. Steven, what you got? You got any last any advice for people who are thinking about mining?
Jerome.
If you're thinking about mining, just start slow. Don't go too far. Use your own money. I know a few that they max out their card to pretty much build their rigs. For some, it worked out fine or okay, but the rest it didn't really because at the same time the returns they're hoping on changes. So some person maxed out their card and bought a rig on the height of Ethereum at 4,000. Now it's at 2,000. It's going to take them forever to pay it off. Um, Not forever, but it just twice as long. But start slow. Don't be a don't be an asshole when you buy cards because there are gamers and everything that wants the cards and stuff. Don't try to like hog them all, but at the same time, just buy them from time to time when they're available. That's the only thing. I know on in the states, it's easier to procure, but there is lines. Like every micro center has lines every morning just to check for graphics cards in stock.
Wow.
Um, And then online you can do it. There's bots. You can buy a scanner, because at this time there's so many like China farms or Russia farms that have cryptocurrency bot scanners. You using a scanner yourself is not putting you at a calling you a scalper or anything. You're literally using the same method everybody else is using to get a card. So it's fair game.
Uh, Thank you for that, brother. Great points. The last thing I'll leave you at is just be careful with margin. Please be careful with buying things on margin, because a lot of people are getting burned like that. They see that everybody's mindset is the same, and we all think the same. We just got to realize that. You think, oh, I could borrow 1,000, double that 1,000, and then just pay it back real quick. But it doesn't always work out like that. You just got to realize that it just has to come down about 500, and or some are different. Some could come down $70 or 70%, and then the brokerage will take everything you have back. So they make their money, and you'll be left with less than you started with. So just be careful with margin. If you're going to take big risk, do it with your own money and a little bit percent of your portfolio. Don't do it with a big percent of your portfolio. For everybody that watched, please like, comment, subscribe. I appreciate you taking the time. I appreciate you, Matt and Steven, for taking the time on this morning to come and share your thoughts with us. I really appreciate you guys. As always, invest in us and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing. Until next time.